I think we always need to pay attention to the fact that the risk is equally clear in that once Bitcoin supports debt obligations, a market decline can become a margin call, a forced kind of collateral transfer, liquidation, or a tax event, a counterparty loss, and also a wider leverage cascade, right? And what I've gone in actually done is create a guide that examines sort of the emerging Bitcoin collateral economy across custodial lenders, DeFi protocols, wrapped Bitcoin markets, as well as native BTC systems, and in fact, institutional credit structures. And what it does is it covers a lot of things, but in particular, loan to value ratios. We also look at things like liquidation, price calculations, and custodial versus non-custodial lending, Rep BTC, CB BTC, TBTC risks, as well as kind of borrowing of stable coins in institutional collateral markets, and rehypothecation, right? Bitcoin treasury strategies. We also dive into yield and leverage traps and a responsible collateral use framework. And I think the most important lesson that I would take away from that is the fact that the platform's maximum LTV is not a responsible borrowing target, right? A borrower should always ask what LTV can survive a 40 to 60% Bitcoin decline, which is typical in Bitcoin cycles, requiring without actually requiring kind of an emergency transfer or refinancing or a forced sale. So the intention of how I created the guide is just to include this proprietary Bitcoin collateral risk calculator that estimates the starting LTV, the interest adjusted debt, the liquidation price, price decline to liquidation, and collateral buffer, as well as additional BTC that's required, and the stress scenarios, right? So I think Bitcoin at the end of the day can become more financially useful, but that doesn't make debt safe, right? The future of these Bitcoin-backed credit markets will depend on transparent custody, conservative LTV design, as well as kind of just having those predictable liquidation and limited hypothecation. And I think that's really what will make it maybe a much more of a credible and sustainable capital market. So let me know what you guys think.